$4.4 million. That's the bet that Michael Burry just took on Alibaba. In the last 5 years alone, Alibaba is down over 67% alone. So the question becomes, why did Michael Burry do this? The guy's known for shorting the market back in 2008, but why is he deciding to go long now? And in today's video, we'll be going over Alibaba's current stock value, fundamental valuations, as well as technical and certain catalysts to be looking for in 2023. Now let's get right into it. To start off, what does Alibaba do and who are they? Alibaba is the largest e-commerce company in all of China, and they actually take around 58.2% of all retail commerce in China. Comparatively, you go take a look at Amazon, which I feel like everyone in the US uses, 39% of all US e-commerce sales. Alibaba is huge. To put it in numbers, Alibaba does roughly $1,800 per their prime person a year. Amazon, that number is roughly $1,200. So the fact that China not only has more people, larger e-commerce, they also have more people paying more money every single year on their site. But the question is, what's going on? Why talk about Alibaba now? It's been talked about this entire past year, and what has really changed? And the reality is nothing much. Michael Burry, just another guy, just like any other analyst, but what I'd really like to point out is Alibaba's next earnings. So the thing is, out of the last 9 of their earnings, they've beaten EPS 7 of those times. And even the times that they did miss, they were very, very small misses. So what I would like to put out there is that this next quarter for Alibaba is supposed to be the best quarter that they've posted in almost the last 2 years. And before that, that was at pretty much the peak of COVID. This next earnings that is coming out on February 22nd, 2023 here, I do think is going to prove to be one of the most strong earnings that Alibaba has ever posted. And the reason for that is just because of the fact that this year has been ramping up in terms of e-commerce. Not only are more people trying to sell products from Alibaba or even their Ants group, but what they're trying to do here is essentially create a monopoly. And again, we kind of see that with Amazon. You go and talk to anyone down the street, they really aren't thinking of any other e-commerce company other than Amazon. And while Alibaba has been growing out their software, as well as some of their other aspects of their business, what I really like to point out with Alibaba is that they are just a better company than Amazon is. See, again, we think of Amazon as this gigantic company, and Alibaba is too. You go and take a quick look at their market cap and you're like, oh, yeah, 263 billion. That's a little bit, right? But you go take a look at Amazon, and the numbers honestly don't compare. Amazon's sitting at $984 billion worth of market cap. So again, just from that pure basic fundamental standpoint, how does that make sense? And the reality is that it's not. The reason why Alibaba over the last few years has really seen just such a large dip in their stock is really along the lines of the fact that there has been so many worries between the relations between the US as well as China. See, last year, Jack Ma, their CEO, just disappeared. Gone. And that rose a lot of suspicions as, well, did he die? What happened? Is he an alien? But the thing was the fact that he just didn't show his face for a little bit. And Chinese stocks got absolutely decimated last year just because of the Chinese-US relations that are starting to heat up once again. And again, this will always be a worry, especially if you are looking to invest or even trade in Alibaba, just because you don't even know what the overnight can happen. Even given like today, Alibaba had a huge potentially marked down here, and they had a -3% open purely based on the fact that another Chinese company was having some problems. So again, Alibaba is going to have a lot of problems with that, but what I'd really like to cover are some of their fundamental valuations here. See, we use these fundamental little things here, like the price to sales as well as price to book, and we use these ratios to kind of gauge, is the stock fair valued or not? Of course, there are many different other things, but from a purely just number standpoint, just look at this with me. Alibaba, in the last year, has actually not taken that large of a hit comparatively compared to Amazon. In terms of their price to sales as well as their price to book, they've seen a -10% in their price to book and -23% in the price to sales. A hit, but nevertheless, something that a lot of e-commerce companies did, even looking at Shopify's last earnings that came out just yesterday. Taking huge hits, but even so, Alibaba really didn't do too terrible. You look at Amazon and both of their fundamentals down almost 44% just year over year. So again, another thing, I know we shouldn't necessarily be comparing Amazon to Alibaba, but purely based on market cap, purely based on fundamental ratios, it doesn't make sense. I don't even want to get into DCFs and other fundamental valuations, but purely from this, why are they trading so low? What is happening? If we take a zoom back with Alibaba, once again, as I said, in 2022, they got honestly pretty decimated. Same with the year of 2021. Again, with them being down nearly 70% from all-time highs, you come to question why and where are they going to bounce? And again, they had a lot of problems, right? We know what their problems were. Their problems with trying to file with the SEC, the problems with the Ant Group, the problems with Jack Ma. But the thing is, their stock can really only go down so much. Fundamentally, again, I know a lot of people will decide to look at stocks fundamentally or technically, but there's no denying where Alibaba is right now. Currently, they're sitting at the bottom of pretty large support here since their IPO back in 2014. But when you take a look here, it really does look like Alibaba's going to try and touch the bottom from the technical perspective. As we're seeing here, Alibaba looks like they want to kind of touch this area right around this $95 a share and try to stabilize around that area. And if they do, most likely speaking, we'll see the MACD, which is the momentum indicator, most likely cross over and turn back up, and try to say it's a little bit oversold. That also being said, there are lots and lots of different places where Alibaba can potentially pull down to, just sort of like around the $77, $78 range, just because of the fact that, again, they are going to take that volatility purely based on what's happening with China. But once again, this is just a stock suggestion, just one for you guys to take another look into, and just a few of my ideas of why I'm looking into it. Hope you guys have a great rest of your day, and peace out.